Let's talk to Clem Chambers. He is the founder of ADVFN. Very good morning to you, young Clem.
Morning, Nick.
Right, equity markets. What are your latest thoughts?
Well, really very wobbly. I mean, I'm just teetering between bailing out entirely because I think we're potentially on the edge of a crash.
Right. Well, that's a pretty punchy headline. And
sorry about that. I'm sure you can edit out my sneeze.
Okay, you enjoy the charts and you enjoy the fundamentals. Okay, what's driving your thought process at the moment? Is it the price action? Is it the sentiment? Or is it anything else?
Both. I mean, the reverse QE process that the Fed's been going at now for a year has racked up from 15 billion a month to now 80. It's going to be running at 80 billion a month until, well, really 2 to 3 years. And that is drawing dollars out of the world economy. And, when you get a dollar funding issue, you get a lot of pain, particularly in the emerging markets. And at some point, you're going to get it in local markets. And then, of course, you've got Trump's war on trade. You've got all this political madness that you see everywhere. I don't think Brexit has much to do with it because, all the European markets are correlating on this and America as well. So it's a global move. And I put it down to reverse QE. Now, on the flip side of it, I do also believe that the Fed has this basically reverse QE lever. And when everything's going fine, it pulls the lever one way and it takes out 80 billion a month, which is a drag on the world economy. And then if it goes pear-shaped like it's going now, it pushes it the other way and pumps money in and kind of does a stick save of the market. So it's trying to manage it sideways for a couple of years. And you can see that management of markets sideways back in 2000 after the dot-com crash. And you had a range between 2000 and 2004 in the Dow that was punctuated by 9/11. There was a crash then, but you would imagine there would be under such a circumstance. But outside of that wild, terrible incident, you had a range-bound market. So I hope that's what we're in for. But, it's whistling a bit because the markets are very weak. And I think everybody would admit they're very weak. And you either think that now has been the bottom, we've had a correction, something between 5 and 10% is allowable in that model. But if it crashes, it's going to go a long way because the markets are all-time high. So I'm kind of sat, nervously chewing on my nails, wondering which way it's going to go. I'm in. I haven't really lightened up at all. I'm expecting the possibility that it might just keel over, like Monty Python's Dead Parrot at any minute. Right. But I'm hopeful that it's going to be, propped up at these levels and we'll see some, a bounce. But so I'm really caught between a rock and a hard place here. But there is a high probability of a crash, I would say. It really is a 50-50. So it's not going to kind of just wibble around. It's either going to bounce back up into that range, or it's going to fall very, very heavily. So that's my position right now.
Understood. Now, gold rallied a smidge last week. What are your thoughts on gold?
Okay. I mean, gold. I know people. There's a audience for gold, and we all know who you are. But I think they might have to wait another generation to see anything there, or something really terrible to happen. And again, I always come back to this about the Bitcoin, is if I wanted to use some flight capital, I would Bitcoin it. I wouldn't actually go and buy gold. It's much more useful to have Bitcoin as flight capital. So one of the major use cases for gold has been very much undermined by Bitcoin. So I do think that gold is going to be pretty sluggish, even in the sort of extreme situations we find ourselves in right now.
Okay. And Bitcoin, you on the bull, bear, or flat at the moment?
Well, Bitcoin's very interesting. I mean, all the life has gone out of it. I mean, it's really, really lost its famous volatility. Yeah. And it's pootling along at $6,400. And it's very, very interesting because everyone says, oh, Bitcoin, troubles with Bitcoin, it's so volatile, oh, rhubarb. Well, actually, not really, not now, not at the moment, which is kind of interesting. I still hope it's going to fall a long way so I can buy lots because I really love this stuff. The altcoins have absolutely tanked, but it's interesting. Ethereum was in a very, very, very strong, very, very clear bear market. It was going straight down in a straight line, and it stopped, and it's now going straight across in a straight line. So it looks like there's a very firm base in right now, which I find hard to believe. But there it is. The chart tells you the volatility's gone. A base has been formed. And I think something very poor would have to happen to knock it through the 6,400 level you're seeing now, or let's just say knock it into the 5,000 levels for Bitcoin. So I think it's looking very strong. I'm just hoping that it'll collapse so I can buy lots cheap. But it's not going to listen to me on that. And I am acquiring at these levels, but just a bit here and a bit there, rather than the sort of dive in head first that I would if it did collapse again.
On that note, young Clem, thank you very much indeed. That's Clem Chambers, the founder of ADVFN.
Thanks very much, Nick.